Good morning to everyone in the US, or afternoon if you're dialing in from Europe. So welcome to our Floating Production Systems Outlook highlights for our non-subscribers. So we appreciate you taking the time to join me for this. I'm going to talk for about half an hour, probably about 20 minutes, just to run through the highlights of our latest report and what's happening in the floating production market. And then I will leave about 10 minutes at the end for Q&A. And so there's a box that you can see, it says Q&A. You can type in your questions and I will try and get to them at the end of the presentation. And so with that, I will get started. So briefly, a quick introduction to Energy Maritime Associates for those of you who are not so familiar with us. The report series on floating production started back in 1996, so we've been covering this market for a long time and seen many of the cycles up and down. And so we understand this sector extremely deeply. And we track the market basically from the beginning. Once they've done drilling and there's some appraisal, something has been found. Maybe it's not clear if it's commercial or not, but if there could be potential for using a floating production unit, we add it to our database and we start tracking it. And then through the whole cycle, as they do concept select, feed, bidding, award into operation, decommissioning, and then finally, whether the unit is redeployed or recycled. And so for us, market data is really the core of our focus. So we have a deep understanding of the projects, of the players, and of the history of the market and of these projects. And so on the back of that, we sell this on a quarterly basis to our subscribers. In addition, we can use this information for added value topics such as workshops to inform and educate our clients, as well as advisory work, working on contracting strategies, which we've seen is one of the key things to success of a project, having the right contracting strategy and bidding strategy. So let me try to adjust my audio. Okay. Comment about echo on the line, so hopefully that will help. We will, as mentioned, we do a lot of studies, including screening, looking at available assets and projects. So next, turning to our clients. Our clients are quite a wide range of companies throughout the value chain, including, okay, great, including from the top, from oil and gas operators to lease contractors, EPC contractors, the major shipyards that are assembling these units, the big equipment makers, service providers like class societies, and then finally the banks and other financial institutions and investors. And so we're very lucky that we have a broad range of clients and also from around the world, in Asia, in Europe, in the Americas. And so we have a very broad reach for our clients, and our clients tell us that our research is the most sort of accurate, comprehensive, dependable, reliable. This is all we do, is floating production, and so we understand this market intimately. So if your company isn't a client currently, we look forward to speaking with you to see how we can be of assistance. All right, and now on to what has happened in the current year. We were off to a very good start, actually. The first 2 months of the year, there were 3 FPSOs awarded, and we seem to be on track for keeping pace. We're probably doing better than 2019. And then, as we all know, the pandemic spread around the world, and oil prices crashed, and everything came to a grinding halt. The chart on the bottom shows the number of floating production systems awarded per year, with FPSOs and production barges in the dark blue, and the other types in the other colors. The light purple color are FSRUs, and so you can see those started to be awarded quite a lot in the last 10 years. And then the orange line is the average WTI price for the year. And so you can see there is quite a good correlation between oil price and awards, but it's not perfect. You can see in like 2013, 14, we still had very high oil prices, but the number of awards had already started to drop. And that was because costs had gone out of control basically. And projects, even if the oil prices were $100 a barrel, some projects were not viable at those prices. And so post the 2015 oil crash, prices reset and costs reset. And then we started to rebound slowly, 2017, 18, 19. We were basically back in terms of number of awards where we were before the price crash. And then COVID hit. And so things stopped very much after the first quarter. But more recently, since the summer, we have seen activity restarting. Mero 3 was awarded by Petrobras to MISC in August. We believe that Parque de Baleas will also be awarded later this year, again by Petrobras. So activity is restarting slowly. What else happened in 2020 is that a large number of units did come off of contract because oil prices dropped and many fields, the marginal fields at the end of their tail life, were no longer viable. And so a number of fields have been shut in. So we had 15 units taken off or to be taken off shortly. 3 of those were immediately sent for recycling. The other 12 are still available. And some of these units could potentially be redeployed. Most of them will probably be sent for recycling given their long ages. I mean, this chart shows on the right, the number of years in service is the length of the bar. So you can see a number of these units have been in service for 15 to 20 plus years. There are a handful that still have a lot of design life left in them. And so there's potential for those to be redeployed. But they join a large number of other units that are already stacked. So this chart shows 12 units available since 2020, another 3 last year. And then you can see there's a big spike of units that have been stacked since 2016 after the oil price crash. And so, there is a range of how old these units are and how long they've been stacked. In our research, we've seen that it's most likely for units to get redeployed within 2 to 4 years of coming off contract. That's not to say that it's not possible for a unit that's been stacked longer to come back into service. We have seen that. For example, the 4 Rainbow and the Front Puffin were both stacked for more than 5 years and then successfully redeployed and put back into service. But overall, of these 50-some units, we expect at least half will be recycled. We've analyzed the units that are available and seen which ones are the best prospects for redeployment. And that's in terms of looking at their specifications, how much design life is remaining in them, and also looking at who are the owners, because some of these are owned by leasing companies who are interested in redeploying them and have finances to put behind that and an organization to put behind that. Other of these units are owned by financiers who are looking just to sell maybe as is where is, and some are more flexible in terms of financing. And so to redeploy these units, it's a combination of the technical requirements, how well they meet the field, as well as a match, not just technically, but also commercially, and trying to find a solution that works between the field operator and the asset owner. So now turning to the current status of the units on order, we have 48 floating production systems, 11 FSOs, and 3 MOPUs. And of the 11 FSOs, 8 of those are LNG FSOs. And so that's been a new trend. In addition to the FSRUs, more recently, we've seen a large number of just storage FSOs, including 2 new ones that were awarded to Daewoo, which will be the biggest LNG vessels ever built at 360,000 cubic meters of LNG. These will be used for transshipping from Arctic, ice class LNG carriers from Russia, transshipped into these big FSOs, and then sent around the world on normal LNG carriers. So this shows where all the projects are taking place around the world. And what we see is there's been an increase in activity in Europe, particularly in Norway. And these are mostly life extension projects for projects in Norway. But these are major extensions, 10, 20-year life extension projects. And so we consider them basically as new orders because of the scope and cost involved. Then turning to Korea, we've seen the Korean market, the Korean yards start to come back into the production sector after a few years of being quiet, particularly in production semis. So Hyundai was awarded a production semi for King's Quay, or King's Landing in the US from L-Log, and now it's been taken over by Murphy. And Daewoo also has a production semi for Anchor for Chevron. And then Samsung has a mix of units available that they're working on. The other thing that's in the Korean market is that Hyundai and Daewoo are in the process of merging. It's been approved by the Singapore regulator. They're still waiting for approval from other countries, but we expect that to move forward. And that will consolidate the number of yards and reduce capacity as well, and make it more efficient. And so for now, those Korean yards have been very focused on LNG type projects, whether those are FSRUs or FLNG, and then occasionally entering into FPSOs or production semis. But they've been much less aggressive than we've seen in the past. And as a result, China now has become the dominant player for both new buildings and conversions. Basically all projects headed to Brazil are basically all being done in China, and whether that's for BODEC or for SBM or for Petrobras directly, Yinson, MISC, all of these projects will be done in China, whether it's a new building or conversion. So the other trend in China is it's not only FPSO contractors that are working in China, it's also oil majors are coming to China, not directly, but through EPC contractors like Fluor, like Technip FMC. And then the other trend in China, similar to Korea, is that there's been a merger of yards. The major state-owned yards, CSSC and CSIC, which were divided geographically between the north and south, have merged again. So there will be more consolidation in that sector. And then turning to Southeast Asia, which had been traditionally the leader for FPSO conversions, they have been struggling a little bit. Keppel just announced that they're doing a strategic review of their offshore marine division. Sembcorp Marine was just separately listed from Sembcorp Industries. And so it would seem to make sense that there will be a merger or some kind of consolidation of the Singaporean yards, similar to what we saw in Korea and China. And then finally, turning to Brazil, there was a lot of activity in the Brazilian market in the past due to local content requirements. That has dried up. There still are local content requirements for some projects in Brazil, but what we see is the trend now is more of fabricating topsides in Brazil and then sending those to China rather than bringing the FPSO to Brazil for integration. And now turning to COVID-19 and the impacts that we've seen there. We've seen mainly it's been delays. There's only been one project that was canceled, and that was the Aker Energy LOI to Yinson for the Pecan FPSO in Ghana. That was awarded very early in the year, and then once sort of oil prices crashed, the LOI was rescinded less than 2 months later. But that is still a very rare event for a project to be canceled after an LOI, and we haven't seen any other cancellations. So of the projects that are on order, we don't expect to see anything else terminated. We do expect to see delays. And so we've analyzed all the projects, and on average, somewhere 6 to 12 months, but it really depends on the specific project. And looking at what are the factors that lead to the delays, one is level of completion. if the project is in the engineering phase, it's very much easier to postpone it. Something like Barossa, for example, versus a project that's already in fabrication and in the shipyard, and delaying it will actually cost more time and money than to postpone it. Also, the location, as we know, COVID has impacted certain locations much more than others, and so it really looks at what are the resources in the country, personnel-wise, as well as for materials, and how well can you move things in and out of those places. So I mean, in China, really most people have reported that China is more or less back to normal, whereas in Europe and other places, Singapore has been more badly affected. And then finally, really what is one of the key drivers is financing and mainly cash flow. And so we've seen that many companies, when the oil prices crashed, they stopped all spending. A number of companies cut their dividend, which was unthinkable, really. And so they've had to really drastically cut back and conserve cash, which therefore means for projects that are on an EPC basis that are paid on milestones, then these companies want to delay the progress so they don't have to make the payments, basically. So I've seen a number of projects rephased, basically in order to reduce cash spending for 2020. And now turning to the market landscape for FPSOs, what we've seen is that over the last few years, the contractor resources have been shrinking, with number of people let go, finances harder to come by. And then on the other hand, projects are growing in scope and complexity and cost, particularly in the Americas. And so what we've seen is now there are 13 leased units on order. 8 of those are for Brazil. And MODEC has 5 of these leased units. SBM has 5 of these leased units. So of the 13 leased units on order, 10 of them are between these 2 companies. In addition, MODEC has another 3 EPC projects on order. So MODEC has a backlog of 8 projects currently. And then we've seen other companies enter the Brazilian market. So Yinson was awarded the Marlim 2 project in October 19. MISC was awarded Mero 3 just this year. But even despite these other companies entering the Brazilian market, there's still capacity constraints. And this is seen by Petrobras announcing that they are in direct negotiations with SBM for the 6th Buzios unit. And this is a quote from Petrobras saying that they constantly monitor the FPSO world market and has identified that at this moment, only SBM has the capacity to meet the technical, operational, and availability requirements of the company. And to that, I would also add financial ability to lease a $2 billion unit. So we're seeing some constraints at the very top end of the market. These are for FPSOs that can produce 200,000 or more barrels of oil equivalent. And then also in the landscape, what we see is there are multiple FPSO contractors who have multiple idle units. So Altera, Blue Water, and BWO all have 2 or more units idle that are looking for redeployment. And so that factors into their thinking and how they want to, which projects they want to focus on. And this also will come into play as, how are the oil companies looking at what they want to lease or EPC, who's available, who can finance. But on the EPC basis, we also see issues with companies like KBR and Fluor have now stated that they're exiting the EPC basis because there's too much risk. And now turning to the future and the forecast, we're tracking 200 projects in the planning pipeline that we track through 3 phases. And what we can see is that a number of projects are getting stuck in the planning phase, particularly in Africa and in Northern Europe. Many of these projects are not economically viable under the current schemes. And so we see a lot of them stuck here, whereas projects in Brazil and places like Guyana are moving through into final design and award. And so we see that there's an opportunity here for future acquisition and divestiture. So for companies to focus much more on certain regions, so either they'll swap assets and then they can focus and develop, hubs or other things on a larger scale, or we see companies divesting from projects that they can't develop and letting smaller independents develop those more economically. For example, Maromba in Brazil, which Petrobras has sold to BW Energy, and they will reuse one of their existing units to develop that field. And then turning to the market drivers, which will then drive our forecast. And I also want to let you know that please do answer in any questions that you have, and then I can answer those at the end of the presentation. So for market drivers, this is information that we get from Petrologica, who is providing data on the oil fields specifically, as well as on oil prices and economic outlook. And so from here, we're seeing that looking on a well by well basis, how are these wells potentially going to be developed? Two options. One is sort of tiebacks to existing units, which are more short cycle returns. And we see a large trend for what we call drill to fill, trying to maintain production through existing assets. And so these will be, there's about 1,300 wells that we see could be developed through 2027. And this is, smaller bases. So these will be 1, 2, 3 wells tied back to existing units over time, which will extend the life cycle of existing units with minimal cost and with shorter payback. On the other hand, there still will be demand for new floaters for very large fields, as well as for areas that don't have existing hubs. So we see another 1,269 wells to be tied back to future developments. And so looking at the future developments, what we see is for our new forecast, about 70 to 150 floating production systems over the next 5 years. Compared to our forecast from last year, we've reduced the number of FPSOs and FSOs by about 15 to 20%, and that's due to the oil price crash and reset, and also companies dialing back their spending. And that's primarily in 2021 and 22. The market will rebound, but it'll take time to slowly climb up. And we have also increased the number of semis in the mid and high cases because we see more activity for those in the Americas and in Australia. But you can see from this chart below, Brazil is the dominant location for FPSOs with about $35 billion to be spent, followed by Africa, which has a mix of FPSOs and some FLNGs. And then South America, this is mainly Guyana, as well as some potential in Suriname, next door, where they're doing additional drilling. And then turning to some details on the FPSOs, what we see is a trend for increasing number of new built FPSOs. And this is a combination of mainly for Brazil, where we see a lot of repeatability. We have MODEC, which has the M350 design, new build, they've already have 2 orders for that. SBM has a fast forward design, where they have placed 5 orders. BW has a design for a new build hull, as do other companies such as Doris, which Petrobras has engaged for the feed for Buzios 9. And it's expected that design probably will be used for Buzios 9, 10, 11, 12. So we see a lot more new buildings for these mega projects, mainly off of Brazil, but also could be in other areas that require very large topsides. And then there'll still be new builds required for places like Australia and the North Sea, which have a harsh conditions. So there still will be a place for conversions, but about a third of those will be converted units. And then we see a rising trend for redeployments. Historically, about 15% of the units have been redeployments. We think that will go up to around 25% because there are so many units available, and it makes financial sense for the more marginal fields. And so what that means is we also are seeing increased sort of bifurcation in the market of many more of the mega units above 200,000 barrels a day production and then more units less than 100,000 barrels a day production. At the more marginal end, where those will be more likely to be redeployments. And so there's fewer in that sort of middle space. And so that has a lot of impact for the market landscape, because executing a project of 200,000 barrels a day requires very different skills than a much smaller unit. And so we see companies changing and focusing, at one end or the other of the market going forward. And then finally turning to the other types of floating production units, which we also cover, semis, FLNGs, FSRUs. Production semis, as I mentioned, we've increased the forecast there. There are a large number of units already on order for the US Gulf of Mexico, and we see continued pipeline of activity there. And so we see more opportunities in the US Gulf of Mexico, as well as on the Mexican side of the Gulf, as well as Australia. So that is a growing market. And in terms of the LNG side, there's been a lot of kind of capacity overbuilt already, especially for FSRUs. So we do see that activity will continue, but maybe not as quickly as in the past. I mean, there are already 5 FSRUs that are trading as LNG carriers because they don't have FSRU activity. And then for FLNG, we see just a handful of projects, mostly in the mid-size, similar to Coral or to the Golar type FLNG. We don't see any mega LNG projects like Prelude coming in the next 5 years. And so with that, I appreciate you listening to the webcast, and happy to go through and take any questions that you might have. Okay, so I have a couple questions. There's one talking about COVID-19 and trying to understand, are these delays, who's going to end up sort of bearing the cost of these delays? In a typical contract, you have liquidated damages, but then there's a question of, is this going to be, does it count as force majeure? And so it really will depend contract by contract, what the details are within each contract, and how the lawyers have drafted it to specify, is a pandemic force majeure, for example, and then even if it is force majeure, what does it say within the contract? What happens during a force majeure event? So I think what we'll see, though, is that for many of these companies, this is a longer term relationship, especially Petrobras. And so I think for the companies that are in there for the long term, they will find a way to work together to find a resolution. Where it's going to get very nasty and lawyers will make a lot of money is probably going to be in cases where it's a one-off event, and yes, it could take a long time to sort out, especially within the value chain, because you have from the oil company to the main contractor to all the subcontractors to going through there. So that will take some time to sort out. But overall, we see projects moving ahead and companies still working together to complete these units during this pandemic. Let's see. There's also a question about do you see more oil majors doing the full scope in China following Tortue? Yes, I would say definitely so. We see more and more companies, whether they're majors or other contractors, doing the full scope of work in China, whereas in the past, maybe they would do just the hull in China and do topsides elsewhere. Now the expertise and the costs and the quality are there, and especially with COVID, it makes more sense to keep everything in one location. So yeah, definitely we see a growing trend for that. Although I think we will see some projects, I believe, go to Korea. I mean, for the Petrobras EPC contract for Buzio 7, the Korean yards are all on the list. And so it's possible that they could be awarded some large turnkey projects as well. But definitely China will be the dominant player going forward. Let's see, there's a question about, do you foresee Petrobras relaxing stringent bidding conditions as the market improves? I don't, that's a good question. I think they will try to balance between meeting their requirements as well as having competition. And so I think maybe rather than relaxing their conditions, they will just look for alternative markets. So if the leasing contractors are all busy, then they will try and turn to EPC contractors or find other people who can meet their requirements. Let's see, there's another question about, do you see local content being a big driver again in Brazil going forward? Currently, I mean, really local content is very much a political issue and is a function of who's in charge politically and what the economics will allow. And so currently, with the oil prices where they are, it keeps a cap on the amount of local content that can be economically justified. So I think it will still be a driver, but they don't want to kill the market and kill the projects as well. So I think they now have learned from the past and will try to manage that rather than imposing requirements that cannot be met. But again, it's politics, and so that is it can be a very big wild card. But if the economics don't justify it, then it's very difficult to implement. All right, I'll take a few more questions. There's a question of what % of future orders will be purchases versus lease. So for FPSOs, we still are expecting about 55% of the projects to be leased units. So that means 45% would be purchases. But it really varies across the spectrum of projects. So we expect that the larger projects, especially the ones that are 200,000 barrels a day plus, that more and more of those will be purchases. And the ones at the smaller end of the market will be more likely to be leased. But we also see a trend for BOT projects where the contractor will build and operate and own the unit. And then after, say, 2-3 years in production, then it will be sold to the oil company, similar to what ExxonMobil is doing with SBM for its projects in Guyana. So we see that as a growing trend. So we would consider those as leases initially, and then after 2-3 years, once they're sold, then obviously they become a capital purchase. So I'm going to take one more question. There's one asking about, what do you see as a typical lag time from drill to FPSO commissioning? And so this really varies. I mean, at the extreme, we've seen ExxonMobil in Guyana. They went from drilling to production in less than 5 years, which is amazing. That's really moving extremely quickly. And so that's at the sort of best case scenario of 5 years, as if for a large field. More typically is in the region of 10 years, and there are certainly projects that have been drilled decades ago and still have never been commissioned yet. But for very large productive fields like the ones in Brazil and Guyana, we see 5 years, and having these standardized designs like MODEC and SBM and other companies have has helped to reduce this lag time. but there are cases of even quicker developments, particularly for redeveloping existing fields and using a redeployment FPSO, and then you could cut the time down to maybe two to 3 years even. And so we see there's potential for that if oil prices rebound in 22 or so, that we could see a spike in demand for FPSOs on a short-term, quick basis, which would be very lucrative for existing units that are available. And so with that, I think that answers one more question. Elaborate more on the short-term FSRU and LNG FSO projects. So our reports include the details of all of those on a project-by-project basis. What are the projects coming up? Which ones are likely, sort of where they are in the planning stages. For FSRUs and LNG FSOs, these are, they're technically not difficult, but commercially very challenging to line up all the players to get the gas sales agreements and have the downstream portion lined up as well. But we are seeing ones move forward, particularly in places like Africa. We've seen there's a JV between Kara Deniz and MOL, they call Carmel, which are converting old LNG carriers that MOL has into FSRUs, and then combining them to provide clean natural gas to Kara Deniz power ships, which are providing power in developing countries around the world, in Africa and in South Asia particularly. So instead of burning heavy fuel or diesel, they can burn LNG. So we see a trend for that. We see a trend also in places like Brazil. Again, new power plants being built for like Golar Power participating in that, where they participate in the new power plant as well as in the FSRU, as well as in the LNG supply and transport. And then also places like in Europe, new projects for importing LNG into places like Germany or the UK, or there's already been projects awarded for like Cyprus, Malta, these sorts of projects. So there are a large number of ones on the drawing board, but some of these are more likely to go forward. I mean, there's a huge number, or a couple of SRU projects in Australia, for example, but none of those have been sanctioned. So with that, I appreciate you all tuning in, and certainly if you have other questions, please feel free to send me an email, and we look forward to talking with you further and seeing how we can help further your understanding of the floating production market. I hope you all stay safe and stay well wherever you are in the world. So take care. Thank you very much. Bye-bye.